Hello, and welcome to the Learning Center. I'm Lillian Travellini, and today's guest is going to be fascinating, interesting, and even a lot of fun. Her name is Ellen Clapper, and I'm going to have her tell you what she does. Ellen?
I'm a mortgage loan officer at Eastern Bank, and I work out of the branches in Newton and Brookline.
So what does a mortgage broker do? I mean,
I'm
broker?
a mortgage loan officer,
Oh,
not
loan
a broker.
officer, right. Loan officer.
Right.
Yeah.
I work for the bank as a representative in their mortgage department, and I only do loans that Eastern Bank provides the general public.
Yeah.
We have different kinds of loans for different kinds of people.
Now, what is the age, that you get most people looking for loans? Is there an age group?
Not really. I'd say for the more seasoned people who are trading up or moving into the market that I cover, which is Needham, Newton, Natick, Brookline, Brighton. They're people that...
All good places to live.
Right. They are people who are, either coming into town or trading up, and they're, any age.
Yeah.
And then the other market I work with often are first-time home buyers, and they are younger.
Yeah.
Definitely younger people just getting started.
How do they come to you? Tell me a typical, scenario.
Well, much of my business is all my business really is referral. Either personal referrals that I go out and get through my contacts with real estate realtors, CPAs, attorneys. The branches give me referrals. And then for my first-time home buyer affordable programs, I'm on a website that I get referred directly off the website.
You tell them to go on the website?
No, I'm on the website from another organization. Puts this is for specifically a program that's for affordable home buyers, first-time buyers under affordable.
Can you describe this program for us?
Well, let me say that at Eastern Bank we have, I'd say, 3 umbrellas or sections of mortgages. The first one is Eastern Bank is a portfolio lender. A portfolio lender means we lend out the bank's own money that we get from depositors into mortgages. So we have the standard 30-year fixed, we have a 15-year fixed, we have a 10-year fixed, and then we have what's called adjustable rate mortgages. We have a 10-year adjustable, a 7-year adjustable, and a 5-year adjustable.
So describe this, what that means.
Well, a 30-year fixed is a standard vanilla product. You get a mortgage, you pay it off in 30 years. 15, the same in 15 years, and in 10 years, you pay it off in 10 years. Right. Adjustable rate mortgages are a lower start rate, but they're only locked in for either a 10-year period, a 7-year period, or a 5-year period.
Why is that?
But they amortize over 10 years, but it's only that first 10, 7, or 5
and
that's
what does
fixed.
that mean? I can't even pronounce it.
Amortize pay off in 30 years.
I see.
All those are called amortization. They pay off in 30 years. A 30-year fixed pays off in 30 years, a 15 years, and an adjustable rate mortgage is fixed for the first, for example, 10 years, and then the remaining 20 years, it adjusts up and down, no more than 2 points and 5 for life.
Is that a good deal?
It is. Yeah. It is, and I'll tell you why. The start rate is often a half, 3/4 to a whole point lower than the standard fixed rate. Depends on the product. But the average, if you did a statistical study of how long people keep their mortgages in the 21st century, it's somewhere around 7 to 12 years.
Really?
So that doesn't mean that they're buying a new home every 7 to 12 years, but it means they're refinancing.
I see.
So the average person who takes out a 30-year fix, more than likely, statistically, might refinance. So when I get a phone call, I will often offer them either the 7 or the 10-year adjustable rate mortgage and explain that if they think that they will either move on or refinance, which is what the statistical norm is, then go with the lower rate and they'll save over the first decade.
Yeah.
So so that's group number 1. That's the portfolio. That's Eastern Bank's own mortgages. What does it also mean? We have our own we have, in many ways, we can be a little more flexible under the underwriting guidelines, and that would all depend on each individual
Why
case.
is that? That you can be, Eastern Bank could be
In
more
underwriting a loan. So if somebody has any special, let me see, what can I say? Any special reason that they think that they're having a little hard time getting a mortgage, I might be able to ask my underwriting department, do you think we could do this? And I'll get a yes or a no right away. But I have greater flexibility in underwriting because I can go directly to my underwriters that sit right in the headquarters in Lynn.
Yeah.
So that's a great,
yeah.
great positive piece of Eastern Bank.
Yeah.
The second group, or umbrella category, is basically what we call the standard secondary market loans. That's loans that we get outside the bank. They are usually 30-year fixed and 15-year fixed, although there are other programs, adjustable rates. And we use the guidelines from other lenders. Someone you might have heard of, Fannie Mae and Freddie Mac.
Oh, yeah. I don't know what they mean, but I've
They're
heard of them.
acronyms for the semi-government agencies.
Oh, I see.
And we follow their guidelines.
Yeah.
And they are sometimes better rates, but we follow their guidelines. So that's the second umbrella. The third umbrella category is what I call my first-time homebuyer programs.
Yeah.
First-time homebuyer / affordable.
Do they come in terrified?
Sometimes
I know
they
we
do.
were when we first bought our first home.
Buying a home, the first home you buy, I think no matter what decade or what year, it's always terrifying, scary, new. It's a big.
It's a bigger loan than a car.
Right. And they say it's the biggest investment a person makes in their life.
Yeah.
And I think mortgages have gone through a lot in the last decade, since 07, 08 debacle. And the word out there is that things are maybe a little harder because they've tightened up the underwriting criteria.
Yeah.
But just to go back to that third category, because I think that's important maybe to know about, is it's first-time home buyers have their own market of loans within Eastern Bank. We have actually 4 products that we offer first-time home buyers.
It's wonderful.
And it is. And the most important feature of all of them is a lower down payment, and in general, no mortgage insurance. 2 of them have mortgage insurance. Now, what is mortgage insurance, right? Do you remember? Yeah. Mortgage insurance is whenever you put down less than 20%, this goes back decades, you have to have what's called mortgage insurance.
We never had that.
Well, maybe it wasn't. When
It
did you
wasn't,
buy your
no.
first home? What year?
In the 60s.
In the 60s.
Yeah.
You know, I don't know when a private mortgage insurance became part of the mainstream.
But it sounds very good. Isn't it a good deal, or isn't it?
No, it's a little pricey,
Yeah.
but it's a necessary piece of buying a mortgage when you have less than 20% down.
I see.
All the banks require it in general.
Yeah.
Now, if you're a first-time home buyer, you only have to put as little as 3% down.
How wonderful.
And in some of my programs require no private mortgage insurance.
Oh,
So
and now
the-
do you advertise that, Pat?
Yeah, we do.
I
But-
should think there'd be a big call for it, especially like, say, people out of college a few years and buying their first home, right?
Yeah, it should have more people because it's really for, I kind of see it for 2 groups of people. And there's one program, both of the programs I have that are the most popular, remember I have 4,
Yeah.
but the 2 I use the most, one is called Mass Housing and one's called Mass Housing Partners. And then there's 2 more I also use, which I won't go into on this because we don't have enough time, but I'll tell you that.
We might have.
Oh, if we do, I'll go back.
Yeah.
I think the most important feature of those 2 that I do the most is that they both have income restrictions, but the income restriction on the mass housing is much higher. It's over 120, a little bit around 123, 125,000. So a
You have to
young
be,
couple,
that should be your,
that's the max.
Yeah.
So a young couple just starting off, getting married, maybe they have very little savings, lots of student loans, debt, and they're the ones that most benefit from these programs because some of them believe two things. One, they have to have 20% down because they want to avoid PMI.
Yeah.
Or two, that they have to have a certain credit score that they might think is not something they have. So
I wonder why.
Right. So I think that, and these young people, especially in our Boston area, are paying these ridiculous rents. And when I tell them about these programs that they can put as little as 3% down, qualify on their incomes together,
Right.
and they don't have to pay these ridiculous rents. They can buy something. They can come out here to Framingham, Ashland, Natick, some of the areas that have a little bit lower pricing, so they can afford to at least get their foot in the market and not pay crazy rents.
So that's very good.
Right, and then we have the second one I was saying I use, which is called Mass Housing Partners.
Yeah.
That is more on what they call the affordable.
And so how does that work?
It means it's more for people who make lower, it's got a lower income restriction.
Yeah.
So remember, the first one had 123. This one is well under 100,000 on their income restriction.
Yeah.
And it is, again, 3% down, no mortgage insurance.
Wonderful.
It's a fabulous program. They're both fabulous programs, and they're just not as well known as I would like them to be, because I think that out there are so many people, young kids, young adults who are getting together, getting married, and don't realize that all they have to do is come up with 3% of which can be a gift and buy their first a condo or a home.
Well, you can spread the message with your DVD, making copies, send them to colleges or grad schools, and
That's a great idea, Lily.
yeah, I know how to publish things.
Oh,
But,
wow. That's a great idea.
Yeah, and set up a seminar, to, yeah. So anyway, how did you get in the business? Tell me, because my show, I like people that see it think, wow, I would like to do that. It sounds interesting.
Yeah.
So how did you start your career? And
Yeah,
let's
well,
share that with my viewers.
Actually, good question. I was a dancer in my youth. And
I love that.
Right, and then I went to...
Will you do, no, I'm only kidding.
Right. I went to NYU, Newark University, and they had a program in dance movement therapy.
Yeah.
And that was, I thought I could channel my dance energy into helping people on a more psychological basis use movement.
Yeah.
However, little did I know how little it paid. I should have done my due diligence and discovered that I needed to make a better income than that. And a friend of mine, this was was in the industry, just had started, had gotten in actually with a mortgage broker. Yeah. And he was working with them, and I used to hear him on the phone, and I would say, boy, he sounds like a financial therapist. Yeah. I wanted to be a dance movement therapist, but he's helping people. He's doing... It is helping. He's telling absolutely. People are telling him everything about their lives in terms of how much money they have or don't have, where they're getting gifts or not getting gifts, what their goals are, their plans, their work, if they're job changers, everything about them. And I thought, gee, that sounds something really interesting. Right. So
helping them find a place where they love to go to relax, like I do with my new home.
Right,
love
exactly.
to open the door and walk in. Yeah.
So I felt like I was doing something really good. Well, what happened next was he was able to get me into his company. Yeah. And I worked for them for about 2.5 years. I just clicked. All the stars were aligned. I loved it. It loved me. And I got recruited almost immediately, 2.5 years out, into a management position at Cambridge Savings Bank, where I managed loan officers.
You had them working for you.
Right. They're training
them. What a rise in a job.
Yep. Training them how to, basically originate or be a loan officer in a residential lending department, which is what Cambridge Savings Bank called it back then.
Yeah.
I worked there for about 5.5 years, and then I went actually to Framingham Savings Bank. Framingham Savings, when it was, we're talking back in the 90s, when it was a booming bank in Framingham.
Yeah.
And I worked there for about a year, and then they decided they were going to focus more just on commercial lending and not on the residential side. So at that point, my daughter came, and I came back out to be a loan officer where I had more flexibility.
And you enjoyed that?
Oh, I love that.
I can tell.
Yeah, I
And
love what
you
I
know,
do.
and
I
that's
am blessed.
And that's a big part of being a success, because, as I told my son, have a job that you look forward to going to, right? And enjoy doing.
Absolutely.
That's the secret. And your enthusiasm shows. But so now that I know that, and my viewers will say, wow, I didn't know what to do, and I think I'm going to try that. That's what happens. Because you gave such a good description of what you did, and you enjoy, and you still love it, right?
Absolutely.
This is going to be your lifetime.
Yeah, absolutely.
Yeah.
And every person is so unique. That's what's so interesting about my job, that every call I get, that person is totally unique. That person's needs are unique.
And you make it possible for them to find the house of their dreams and to be happy. So let's go back to what happens when you have to reject someone. I mean, what things come into that picture?
Well,
So that my viewers can avoid those things.
Right. Well, what I do, my style is I don't reject anyone.
You don't.
What I do is I ask questions.
Yeah.
So, for example, on the first-time homebuyer side, mostly, I will say, I get calls to, I want to buy my first home, and I will go, and they heard about one of these programs with 3% down,
Yeah.
and they've heard about different housing that they've heard are more designed for first-time home buyers or affordable. And what I do is I go can I get pre-approved? They asked.
Yeah.
That's the big thing. Everyone in this marketplace, every realtor from the highest end, $1 to $1 million, multi-million dollar properties to the lowest end of $169,000, everybody needs to get a pre-approval.
What does that mean?
A pre-approval is they come to me and I go over all their information. It's just like an actual mortgage program. I ask them and I put into the computer social security numbers, date of birth, what do they do, their income, how long they've been there, what kind of money do they have in the bank for the down payment, proof of it. And at that point, no address, because this is a pre-approval. It's just information on the client or the buyer. And then we order a credit report. And at that juncture, I will then if all the stars are lined up, to say, I will at that point give them a pre-approval letter.
Yeah.
And they might call me and say, from anything from, what do I qualify for? I make X for a living. I would like to get my home. What do I qualify for? And I'll do a kind of quick and dirty, what I call it,
A quick and dirty.
right, quickie.
Yeah,
A quick,
quickie.
quick overview of what they might be able to afford, which is kind of the first step.
Right.
And then the second step is the actual pre-approval process, where they give me the exact numbers. I tell them what they can afford. I pull a credit, and I go over the numbers with them. Now I know all about the person. So I can then kind of guide them on a sense of, you can afford to buy in the $500,000 range, in the $700,000 range, in the $300,000, in the $1.2 million range, in the
That's wonderful.
$250,000
So they don't go
right.
dreaming that they can get a $1 million
Absolutely.
house
Right.
and have their hopes dashed.
So I think you asked, when would I not approve them? Or
Right.
as I said,
And what things would come up that you'd have to say,
Right.
I'm so sorry, I hate to tell you this, right? But I don't know how you would do it.
Right, well, what I would say was, this is what you need. This is how I do it.
Yeah.
This is what, not never that you can't.
Yeah.
if I pull a credit and I see they have a low score, for
Yeah.
example,
Right.
I'll say what you need to do is get your score up to a minimum of 680 or 660 or 680 or 700, whatever my program requires. Every
Right.
program has a different
Right.
number.
Yeah.
And then I will tell them how to do it. I actually have a guidelines on how I can tell any borrower, client, customer, how to get their credit score up. It doesn't, not overnight, it takes several months and sometimes years.
How do you get credit scores up?
Well, there's a lot of criteria, but I'll go back to that in 1 minute. Let me just say that so I would tell them how to improve their credit score, and I'll tell you
Right.
how to do that. If they didn't have enough income, I would say the income they need. So I never tell them what they can't do, I tell them what they need to do.
Yeah.
So I might tell them that if they don't have enough for the down payment and the closing cost, I'll say you need to save X
Oh,
over
good.
the next few
So
months.
they
and
have
come. So they
a
always,
number.
right, so
to
they always walk
aim for.
away with concrete information, not negative information.
Good.
Concrete, positive information they need to work on
Right.
if they don't quite fit right away what they're looking for.
That's absolutely wonderful. So they don't feel like they're losers and they never can own a
Absolutely.
house.
Never,
What a
never,
great
never.
technique.
Right.
And
Never.
usually it's because of credit rating. And that means when you use your credit card too much? or-
Well, that was a good question you asked. You said, how do you get your credit score up? And I wish I had brought that inside the studio today, but I'll tell you what I remember. In general, the credit bureaus are looking for a couple of things. The model, whatever drives the credit bureaus, the scoring technique,
Yeah.
I do not speak for a credit bureau, so I just want to make sure you know. I'm just going to give you a kind of overview.
Right.
Is they want to see that you pay your bills on time.
Yeah.
They also, a big one, is when you have a revolving credit card, all of them have a maximum balance that you can borrow against. They only want you to use 30% of that balance. So for example, if you have a Visa card and that has a $10,000 balance, they only want you to have used $3,000 or 30% of that. So that's the two kind of quickie ones I can remember off the top of my head. There are some other ones. So for example, a customer came in the other day and he said, Ellen, I know my credit is terrible. I can't get it. He knew. He had 560, I think it was.
Yeah.
And
that's bad.
it's low. It's difficult to get a mortgage on that. We have a program that will allow it, but in general, when a client comes to me and says, I have a very low score and I'd like to get it up, I'll go over all those criteria. I'll say, do you pay your bills? Are all your debts, the balance is 30% of the max?
Right.
And they will then say, no, I have the max out on it, or I have a 10,000 line and I've used 9,000 of it. Those are the things they can change. Now, obviously, it takes months to do that because, you'd all of a sudden you have to pay them down.
Right.
And not keep using them. But in general, they don't want to see you close them up. They want to see you temper
Lower
your
them,
payment.
yeah. So it shows you have good intentions.
Good intentions, and that's a good way to put it, and that you have good control.
Right.
Right. And you know how to balance and use credit.
So that, do you find most people when they give that news do work at it?
They do. They do. They'll call me back and they'll say, Ellen, we talked about 3 months ago. Do you remember me? And I say,
Do you?
Sometimes I do. I have it written down. And I say, yeah. And they say, I think I did everything you said and my credit's up and can we go forward? And I say, yes, let's go.
Wonderful. What a great, sounds like a wonderful job, really.
It is a fun job.
Yeah.
As I said, everyone is different. It's as different, every day is as different as the people that call me on the phone. So.
Yeah, they're all different. And,
Right.
So what about the range? The more expensive the house, the more money they have to put down, or it doesn't matter?
Well, the more expensive the house, you generally have to put down 20%. So if you're looking at, lots of homes around here are, as you know, going over $1 million.
So
You'd
that's
like
about the limit
You
that
mean,
that you deal with?
oh,
Or?
no.
No?
No, Eastern Bank goes up to $3 million
Does
on their
it?
mortgages, yeah.
Oh, wow.
Yeah.
And they give out $3 million mortgages.
Well, I haven't yet, but I've done over $1 million in mortgages.
This
so
is another thing I want to ask you, where you were so much into, like your dance, emotions and things. Can you tell when somebody walks into your department, after all these years of working with them, who is, at what range they're in, and how it's going to be an easy sell or it won't be?
Oh, that's a great question.
Yeah.
I would say
That might help you, right, when you look at them?
I can't actually tell people like that.
Yeah, really. So, Ellen, this has been very, very enjoyable. And if somebody wants to get a hold of you, how do they do it?
My name is, as you know, Ellen Clapper, Klapper, and I'm at Eastern Bank. I cover the Newton branches, and if you'd like, I'm at e.clapper, Klapper, at easternbank.com. And if you just go on, Google me right in there, you'll find me, and my cell phone number's there and my office number.
Well, I wish I could use you. I'd love to be in your company and see you work your figures with me. But I just bought a house, so. And I'm glad to find out what people have to do to get a good mortgage. Thanks for being on the show.
Thank you.